Welcome to my more important analysis videos on Tuesday the 28th of November with me, Rich Market Analyst at Hantec Markets. We've got a fairly quiet-ish open today. I think the markets are fairly cautious ahead of some pretty key risk events that are coming up as the week progresses. Let me just show you how we're looking on the markets board, whereby basically we're flat in euro dollar, sterling a little bit weaker, yen a little bit weaker. So basically what we're looking at is a very mild amount of dollar recovery, but not too significant. You can see that reflected as well across the sort of more commodity-based currencies as well. But looking at this dollar index, is slightly ticked higher, but it is interesting that we're still in this sort of corrective phase that has been building over the last few weeks. We broke below that key October low on the dollar index, 92.75. That was the key level that was seen on the breakout on euro dollar above 1880. The two marry up fairly tightly, and that got broken yesterday. Not into the close, but still with I think still in this corrective phase nonetheless. Now this is coming as what we've got is treasury yields, which are sort of drifting really on the 10-year, mildly still pulling higher on a trending basis, but that 2 to 10 spread continues to remain pretty flat, or flattening I should say. Which is sort of one of the reasons why the dollar is under pressure. Now, the key risk events as the week goes on are going to be today we've got the incoming Fed Chair Jerome Powell testifying before the Senate Banking Committee. He's going to be giving his views, and subsequently the market will be looking out for what what he thinks about inflation and also regulation. Regulation will be key increasingly, I think, as a factor. But also as the week progresses, the Senate tax reform bill will be key. Republicans are trying to push the tax reform bill through the House, through the Senate, and it's a bit of an argument still going on in the banking in the committee stage as to whether they're going to put it to the floor to debate and then subsequently vote on. The expectation was it could be as early as Thursday that it could go to the floor, but at the moment there's still a few senators on the Republican side who are not entirely convinced by it, so there is still a risk behind that, and subsequently we have seen the markets or the dollar under pressure through that. But generally speaking, on the equity side, well, Wall Street was flat to lower, basically flat into the close yesterday on the Dow and the S&P. Asian markets were broadly sort of mixed as well, but there has been a degree of positivity, nothing too significant on the European equities, but generally speaking, it's sort of still in consolidation mode on those markets. Gold has just come back a little bit, but it's consolidating a bit, and what we're seeing is oil, which is consolidating back a touch ahead of the OPEC meeting, which starts tomorrow, and a key factor surely to drive the oil price in the coming weeks. So that's basically what we're looking out for today. We've got a little bit of data. We've got the Case-Shiller House Price Index expected to pull higher to 6.1%, which is the 3-year high actually. Consumer confidence remains very strong in the States, 124 expected there, and the Richmond Fed manufacturing 14 expected there. Now my chart today is the FTSE 100, which I think is a bit of a concern, because I think what we have got is a consolidation, and that consolidation is coming in underneath the breakdown level of this top pattern. That top pattern gives you a downside target of sort of measured from 7565 down to 7437, so around about 130 ticks, and you could sort of suggest that we're going to be coming back towards 7300 area, 7310. So still not seen that yet hit. 7350 was the low before the bounce, but yesterday's candle concerned me in the fact that we've sort of been building into a rolling over. And it'll be interesting to see what happens now today. Having had this early gain, will the market start to sort of use that low at 7374 of today's low as a support? Well, it's interesting that it came in bang on what's that, Thursday's low from last week. So It'll be an interest. It is an interesting consolidation that we've got, and I mean, anyone who reads my DAX analysis on the website is sort of. Yeah, I'm being a little bit cautious now on this recovery that we've seen in recent days. The rebound, obviously, we saw last week from FTSE has, as I said, rolled over to an extent. You've got these momentum indicators, which are still fairly negatively configured, aren't they? MACD lines underneath neutral, stochastics under neutral, RSI still below 50. So whilst trading underneath this neckline resistance, the neckline got hit to the tick yesterday and then fell away. Whilst trading underneath that, you've got to remain, I think, in a corrective outlook and pressure towards the 7350 level. So 7350, I think, is key on FTSE near term. Because if you break that, you're looking at 7300 and possibly 7200, which is that September low. So yeah, this consolidation has jumped a bit. What's that? 25 ticks higher today, but will it continue? Yeah, I'm not convinced. I think resistance underneath that neckline at 7437 is key. You can sort of see that on the hourly chart as well, whereby you sort of rallied back towards levels that selling pressures tended to come in. These momentum indicators still look a little bit corrective. RSI under 40, if that sort of turns lower again, that would be pressure. So if that first support, 7373. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.